looks like, oh my gosh, that was a really good episode I just listened to with Avery and Carina. You know what? This chick seems okay. I might want to book some time with her. Let's have the rest of this coffee and talk to her and see if it works.
Hey everybody, welcome to Wealth, Wisdom, and Winning. Today we have for you a special treat. We have Miss Carina, and she's gonna teach you and talk to you about the wealth part. Because how is it that we're gonna build wealth, not manage it, not leave a legacy? What sense does that make? None at all. So I'm gonna allow her to introduce herself, and then we're gonna dive right into this conversation.
I love that. And I love the title of the podcast. I'm Carina, like you said. And one of the things that I always say is that building a legacy is the most feminine thing we can do. So just like you would mention, like we're gonna what? Put in all that work and then have the IRS come and swoop in and take it from us?
Yeah.
No. Like I literally don't think so. That's absolutely not going to happen. And my responsibility as a financial services professional is to make sure that that never happens. I I one of the reasons why I think I've connected so much with you in the short time we've known each other, Avery, is that I believe that wealth is a spiritual practice.
Hmm.
And the more that we align within ourselves, the more that we find faith, whatever that means to you. I know what it means to me. I think you're very strong in what that means to you, Avery.
Hmm.
But anyone's personal definition is valid and it counts. And the more that we align within that, the more that we can actually build long lasting wealth. So I'm excited to talk more about that with you.
So I. So I just want to ask you a question first before we get so deep into wealth and legacy building and maintaining our wealth. I want to ask, how did you get into the space that you are in right now? What was your upbringing like, or your
Yeah,
experience like, to bring you into the fact that I need to build wealth and I need to build legacy for my life and for my generations to come?
that's a great question. And it's interesting because I grew up on a very small island in a very impoverished neighborhood. Well, technically, I was very I had one of the clients that I have describe herself as like broke rich or rich broke. I don't know if I would self-classify as that as well, but I definitely was more well off compared to the people around me for sure. But whenever you look at the fact that the people who I was growing up around were battling, at home, battles I could never understand, sometimes like meth addiction, domestic abuse, a lot of really difficult things that thank God we didn't experience in the home. But growing up on a little island in a very small town, I saw a lot of hardship and I saw a lot of very closed mindedness. And I always just felt like there was more. I felt like there was a way to have a bigger life, like open minded and free. And that's been like a constant theme throughout my life. I joke sometimes that like I used to not have two dimes to rub together multiple times. And now I'm like the dime who solves $50 million tax problems. And I'm sure you as a CPA can understand that. I'm not a tax specialist per se, but I'm able to help people through assets
Mhm.
that, mitigate their task risks at task tax risks. And we can get into the depths of that. But it's just interesting because I didn't ever grow up thinking like I'm gonna be a wealth specialist. Like, no, I wanted to be an artist, and I am an artist, and I love that. But once I started looking at money and wealth building as an artistic medium, that's when things started
Mhm.
to shift. And what really got me into this industry is philanthropy. And I was just telling you about I'm very tired. We've been doing a lot of philanthropy work this weekend, but that has brought me the awareness of just how much wealth disparity there is in the world.
Mhm.
Working with children who grew up in slums, like some of the biggest and most slum-like conditions across Africa, and then simultaneously being in some of the most luxurious high rises in Manhattan. The bridge that I get to be is a beautiful thing, and it's not lost on me that I'm in that position of privilege. It's an intentional choice.
I love that because we see, and I resonate the fact that, I grew up kind of the same way. We were not super and uber rich. Eh, by today's standards, we were poor, right? But coming from that, we see all of that, and sometimes we're limited. And some of the kids who grow up and who are in conditions similar today, they think this might be it. I'm not going to see more. I can't do more. And they think that all they see is all that they'll ever have. So to have that mindset that, no, there's more. I can get more and then go for that more. I really love that for you. And I really commend you on trying to even get it, because sometimes we just have dreams and we just leave
Yes.
it at that. We don't try to work towards them. So tell me about some of the things that you would have done to ensure that you did not stay inside those sceneries and predicaments that you saw, that others that are listening to this can do if they are in the same predicament, or even if they're just trying to build wealth for themselves.
Oh, that's a great question too. So totally. I mean, I think before you can ever really fully understand the power of certain kinds of investments, you got to start investing in yourself. And
Hmm.
it's like almost cliche at this point because we hear that and everyone says it, but like, what does that mean? And it's different for every person. Investing in yourself could look like buying a pair of ballet slippers. Investing in yourself could look like buying the microphone in front of you. Investing in yourself could look like buying a book, or it could even look like not buying something. It could look like, working out, eating well, making sure you drink water. All of those things are ways that we're pouring into ourselves, and that's how it relates back to like spirituality in a sense, because what we're really doing with wealth is protecting our energy, but on a material level, and transitioning those visions from like all the way up here in the ether and in the heavens down into the physical world and living on earth. And so I think the first and foremost thing is get right with yourself within. Do whatever you need to do that. If it means hiring a coach, if it means staring at yourself in the reflection and crying for like an hour because you have stuff you don't want to admit to yourself, that's a form of investing in yourself. And you become a better person because you do that. And those are the things that you can implement to get really real about what kind of life would be your actual dream. The biggest asset that the youth especially have that people who are older who maybe have more money don't have is time. So
Hmm.
being able to allocate that properly and reverse engineering the fact that we have 168 hours in a week. So you get to master what that looks like for you instead of just handing over 80 hours of it to like a job that you don't care about. Maybe you need a job right now financially. That's okay, but you have 100 other hours almost in the week. If you are working overtime like that, you're going to need to rest some of it, but what else can you do or even just envision for yourself that is bigger? If anyone's curious, I have 10 steps to alignment on like the link in my bio site. It's like
Hmm.
a 10-step simple thing that is a digital download that changed my life. And it's the process of reverse engineering those things in a way that's unique to you through like personality tests, and you can design that. I wasn't even expecting I'm like bringing that up, but
No,
it's
I'm
like,
glad you did. I will
yeah,
have the link inside the description, but go on.
thank you. Yeah, it's just to me that was my first step, right? Because without that awareness, you might not even know what career path you want. I mean, if we're talking about like very, very, very starting, which I started from there. So, like, it's a very fair question. If we're talking at that point, it's like you can't think about the stock market. Like, you just don't even know what you want to be in this life. And maybe you do think a little bit about the stock market, but like, it's irrelevant if you don't know yourself. And
Yeah.
that's the biggest investment you have. You are your biggest asset.
Oh, I love that. I like to tell people, don't people like to make like now goals. but you have to think big picture. So even when I'm coaching my clients, I'm like, so what is the end goal? What is the end goal for your life? Not 5 years, 10 years, 20. Like, what is the end goal when you said everything is good, everything is great, I can do bare minimum or nothing, and I'm happy, I'm content. I have the house, the car, the job, if it's a job, the job, whatever it is, what's the end goal? And then once we know where you want to be, we can develop the steps to get you there. Because when you don't have a goal and you don't have a plan, then you're just wandering around
Yeah.
aimlessly doing anything and everything without no rhyme or reason. Because we
Mm,
can all do things. You can invest in the stock market, you can start the business, you can do whatever it is, you write the book. But at the end of the day, if it doesn't go towards your end goal, why are you doing it?
exactly. I always say some people are so poor, all they have is money. And
Mm-mm,
if you really don't have like a sense of purpose on this planet, it doesn't matter how much access to resources you have. People have the same kinds of problems on opposite ends of the spectrum, and it always comes down to that. So like, I'm not an inspirational life coach. People I think find me inspiring. I bring more, I get to the root of that so that we can figure out what the actual process is for building assets and for financial planning on every single level. Like I think I have like that kind of energy that people will be like, I'm not really looking for a business coach right now. I'm like, great, because I'm not trying to business coach you. So I'm like not trying to sell you on anything. It doesn't, I don't charge people to speak with me. That's not the way that I operate, which is just different, I think, than what's trending right now. And there's nothing wrong with that. I actually refer a lot of my clients to those kinds of coaches because I
Mhm,
can only hold space for people up to a certain amount, and I want them to have that. And those relationships with those kinds of people helped me so much. But
mhm,
that's not the process of how I work. Um, Maybe I should explain it because I'm like be alluding a little bit to it, but not giving the specifics. So I'll just say how what I specialize in, I guess. I work with people who are at any level of wealth building. So whether you're, just getting started, like you had described, or more frequently, I'm working more with people like closer to the level that you're at, honestly, Avery, who are like building their own businesses, have cash flowing, maybe don't know necessarily how to asset allocate in a way that's going to benefit them from that long-term vision, also from the midterm and from the short term. And the midterm is where we break down even in multiple ways, because we talk about what's called qualified money, which you're very familiar with, I'm sure, as a CPA. You know that's your IRAs, your 401ks, and then there's non-qualified money. I'm not going to go like deep into the heady stuff because it's just, if people are curious, we can talk one-on-one about it. But
mhm,
essentially, building wills and trusts, life insurance, retirement planning, education planning, long term care. Like, we have that idea, like you said, beyond our retirement. People really honestly think to their retirement if they're thinking in the future at all,
mhm,
and they don't necessarily think about like, what about after retirement? Like, who's literally taking care of me at the end of my life? How am I going to pay for that, because I already spent my retirement money, right? So we have to plan
mhm,
for that too. And then estate planning as well, because like you opened the conversation with, we're not going to plan all of these things and then not have an estate plan so that
mhm,
it's like on totally vulnerable ways. So I know I just threw a lot at you, but I wanted to make sure that I was clear on like what I'm talking about, because these, like, legacy building, that's a cool buzzword.
mhm.
What does it mean? So those are the tangible ways I help with that.
Right. So let's talk about the process of it, because now we talk about you helping people in the different stages of their lives, right? And what that may mean. So can we get a little more detailed
Yeah.
in that? And or even if you can provide an example for somebody that you may have worked with, a story, or if you may, so that people can understand exactly how you can help them, why it's necessary for them to plan for their wealth and to ensure that they have these things in place. I mean, we can talk about doing it, but they need to understand the importance of it, right? And then
Yes.
to um what they will get or what they should expect to get after working with you?
Absolutely. That's a really great question as well. You're like on it with all the great questions. So let's see. I'll start with a one of the reasons why it's important, I think, and I guess I'll just do it through like an example as I continue to explain. So,
Mhm.
for one of the things that we help a lot with is structuring these things through life insurance, and the reason why is because it's a very powerful tool that can not only protect you after you pass away through what we call the death benefit. It's
Mhm.
what, is given to your family when you die. It's like an ugly conversation sometimes, but it's so much peace of mind, especially as a woman. I feel like all women really actually want at the end of the day is to just make sure like their loved ones are taken care of. It's the reason why we run to the kitchen 5 times to get the napkin. It's the reason why we wake up early to fix the lunch. Like it's the same thing, only this is like the ultimate peace of mind in that because it's us knowing that even if we disappeared, maybe they might have a little bit of stuff on their face and maybe their
Yeah.
lunch is not taken care of, but at the very least, their finances are in order. So I can also give an example of what I've created for my own self. I think that's sometimes the most powerful testimony.
Mhm.
I talk about other client testimonial type things in a way, not really testimonial because I'm the one relaying it, but an example. And also I can talk about structuring it for myself because it shows like I wouldn't recommend anyone for anything unless it's in their best interest.
Mhm.
And I wouldn't recommend anyone for anything unless I literally had like skin in the game for it myself as well, you know? And so I think that's really important because, especially in my industry, especially in the conversation of life insurance, people are very turned off by it if they understand it at all a lot of the time because I mean even we had this sort of back and forth a little bit not with talking about you but just in
Mhm.
general like people who do the work I do are often like looking to like get something and that's not my perspective. That's good for them, but that's not the reason why I'm doing this to protect women. I'm doing this to educate women, and so I'm very intentional about who I take time to work with, right? And
Mhm.
so let's see. The process looks like this. I have a woman who's a client. She's also a friend, so I'm grateful to be able to like help out my friends in this way. And she had the goal after working up and building some cash flowing in her business to be able to make sure that her family's taken care of after she dies. And she wanted to be able to access some of the capital that she has to be able to like invest in herself, but her
Mhm.
time horizon or like the timing that she needs that is longer. Like she doesn't need access to it necessarily immediately. She can wait a couple of years. And again, every these things are totally different for every individual, and so I want to just make sure I'm disclaiming that in the beginning that this is like not financial advice. This is also like just sprinkle that in there for compliance reasons.
Yes.
But it just depends on the person, and the main objective is like if this is curious to you in any way, like we can talk about it because before
Mhm.
you run off trying to figure it out for yourself, it might not be relevant to you specifically because something else might be better. I'm just sharing like what she created, which is similar to what I've created for myself. So when I pass away, I know for a fact that right now today, my family would be given a check for $1 million. As I
Yep.
no, that's my number, right? That's my bare minimum number. Like that's
Mhm.
that we're talking about. Anything lower is like cute. That's cute. But like let's rake it up. Like yeah.
Mhm.
And so that's just today. With the strategy that I've set in place and the strategy that my friend and who is also my client has equally set in place. We're around the same age where we have, we don't have dependents, meaning we don't have any children. We both have ideas of how we want to invest in ourselves in over the next several years. The strategy essentially is to have two different types of insurance, and I want to be careful to not go too deep into the kinds of everything because it's just
Mhm.
overwhelming the first time you hear it, and it's like, what is she talking about? But basically, there's the a type of insurance called term insurance. I'll
Mhm.
break it down easily. Term insurance for a certain period of time, it's short term, and it terminates after that time. So term. And then whole life is for your whole life. It's
Mhm.
simple as that. But this is beneficial because it has all of the benefits of term, and it's what's called a cash accruing asset. It's going to
Mhm.
have a cash value. So over a certain period of time, it's growing. The death benefit is also growing, meaning it's increasing. That $1 million will grow more and more and more. And some types of term insurance are convertible into whole life.
Mhm.
And so, what I've set up for myself and what she has for herself as well is a $750,000 term insurance and $250,000 whole life insurance. Over the next couple of years, I'll convert portions of both of that policy for myself. She'll also convert portions of that policy for herself to increase the value of her whole life, turning that $1 million closer toward the end of our lives, closer to about $7 million because of the power of compound interest.
Mhm.
So that's a lot of information. Before I speak anymore, does that make sense to you? Do you have any questions about that, or do you feel like your client, the people listening to this, might have questions that you'd like to ask on their behalf?
I think a question might be because I understand the terms of it because I have
Yeah,
both myself. Um, would be how do you know when to convert? And I guess that would come in more of your explanation. And I could say for me, I converted mine as I continually um, acquired assets. I changed mine because it's like at that point in time, those assets for me will be able to generate income where I don't have to, case in point, like get insurance for it because it's already an asset when I die.
yeah,
It's there. So a
yeah.
question would be for I would think that they may have is like what is your time or a plan or what are some things that are going to trigger you to convert from term to whole life?
Absolutely. Well, one thing I'll say is you don't necessarily have to have both to begin with. So it really depends on the person's strategy. Term insurance as term insurance without converting it is still very valuable because, like you said, it's there. You know it's going to happen as long as there's a reason for it. The issue, one thing I will say with term insurance sometimes is that, like, I'll throw out a quick little pop quiz. Okay, so I'll tell you that with whole life insurance, 100% of the time, 100% of the time, the death benefit gets paid out.
Hmm.
Most term insurance is 10-year or 20-year insurance, right? So let's say we have a 35-year-old who has 20-year term. So from 35 to 55, they're protected. From 56 onward to the rest of their life, that term insurance is no longer relevant.
Hmm.
If they die between that time, it's not going to be paid out. So let me ask you what you think. What percentage, in comparison to the 100% whole life, what percentage of term insurance death benefits do you think get paid out? Just any number you could throw out.
Well, no, you could just give me an answer because I don't know.
Okay,
So,
that's totally fair, and you don't have to like play a guessing game with me. It's 2 to 3%.
wow.
Yeah.
Yeah, because people aren't dying that young, are they?
Not usually, right? And so term insurance, while valuable, if there's not a plan for it, if there's not a strategy in place for it, or if there's not a reason why we're utilizing it in that way, it's almost like you've been renting an apartment your whole life and then you get to a certain age and you wish you owned, but you were putting all that money into something that you, at the end of the day, don't get
Oh,
access to anymore.
and
Yeah.
yeah.
So there are benefits to it. I'm not knocking it. Like for debt elimination, there's a lot of different reasons why it could be beneficial just to make sure to like cover yourself for a certain thing.
Hmm.
Um, but that's one of the things I wanted to just sort of like express during that, it didn't fully answer your question though, so I think it's important to talk about that as well. So I wanted to make sure, because it's like there's also this idea that people have that term is bad, and that's not true. Like there's
Yeah.
no such thing as bad or good. It's just what matches what your needs are right now and what works for you in the long term, what
Mhm.
matches your risk tolerance and what matches your time horizon for things. This is one
Mhm.
of the safest kinds of things. It's technically not even an investment, life insurance,
Yeah.
because it's not, it's a guaranteed type of thing, you know, it's really an asset, an estate plan type of something that you can begin to build. But what you asked me was, how do we know when it's the right time to convert and if you should convert, and all of those different questions. I think one of the main things is, first and foremost, meeting with someone like myself who actually is going to ask those, period, ask, ask those questions, um, who wants to understand the full scope of your life vision, right?
Mhm.
Because it's great to like have something for a short term, but if it's not matching up with what you're looking for, or it doesn't make sense with your income goals or projections, like, then it doesn't make sense. And unfortunately, I've had clients who have paid higher premiums every month for their policies with very little benefits, higher premiums than I pay for mine, with like
Yeah.
quarter of the coverage, and that's no good. And so that's something that it's important to be able to take a look at what's the person's income, how much can they actually justifiably allocate towards something like that,
Mhm.
and be able to have a strategy behind the reason why they're doing those things. Maybe term is the right thing. Maybe whole life is the right thing. Maybe a little bit of both, like what I was describing for myself, but with a plan behind it. Does
Mhm.
that answer the question?
It most certainly does.
And some, I'm sure, knowing
And some.
myself. It most certainly does. Good. I'm glad.
Yeah. So I know that there's, oh, I don't want to take you off your train of thought on how that may look, but I know that there's a difference in pricing as well for both. 'Cause you even touched on it when you said that somebody may be paying
Yeah.
more for less, and it's not even an asset like whole life. So I don't know, maybe you could touch on that a little bit, and then I'm gonna let you just finish run on about the process because I want everybody to get it before we wrap up.
No, I love that, and I also think it's a perfect question to ask to understand the process, because it the premium amount and
Hmm.
what people's goals might be with that will determine how you would want to structure it, which is part of how the process is impacted as well. So, one of the reasons why we would split those things up is because term insurance, because it doesn't have the cash value, it doesn't have any benefit beyond just the death benefit itself. It doesn't it has a much lower premium. I can't give exact numbers because everyone's is different depending on their age, depending on their insurability,
Lifestyle.
their lifestyle. You're exactly right. If someone goes skydiving often, if they drive a motorcycle, they would want to be like mindful of how they communicate that. They want to tell. You always want to tell the truth. You have to tell the truth. Absolutely tell the truth. I'm not saying don't. I'm just saying, like, being aware of the fact that those kinds of behaviors might impact the the amount of money you would pay in a premium, because a life insurance company will look at those kinds of behaviors and lifestyle and say someone might be at high risk. If someone
Mhm.
has a lot of speeding tickets or accidents and things like that, those could be factors. They're not necessarily, but they could be factors. Age is a factor. Health is a huge factor. If someone unfortunately has a terminal illness diagnosis, it's going to be a lot harder for them to be able to get the kind of coverage that they might want to have. There are ways, there are definitely ways, but again, that's why you want to meet with someone who is able to get access to all the different kinds of available things and make
Mhm.
recommendations based off of that. And that's something I have access to through myself and through my team. And so that is depends. The whole life policies have a higher premium, and the reason why is because there are more benefits to it. but they also increase over time. And that's
Mhm.
something that's called an illustration. That is like a chart with a lot of numbers that could seem overwhelming, but I have like a fun way of describing it once I actually run those experimental values with people, and we can like look at what that really means. But because it costs more, if a person has a specific, I don't even say cost, because you're putting in more, because the outlay is higher, the person might have a specific budget that they're looking to work within for that premium. So we would calculate what that looks like and reverse engineer the amount of coverage they could get from the best carriers with the
Mhm.
kind of classifications for health and all those other factors we talked about, and see what might work best for them. Um, or from the other side of things, maybe the person wants to know that they'll have a specific amount of coverage, and then we would just calculate what the premium is. It just depends on the way that the person wants to go about it, whether they want a
Mhm.
budget amount or have the actual value be a certain amount. So that's the one of the main factors for premium. The other part of your question was to really finish out the process. So without being really wordy, I want to explain it in a very, very simple way. This is what it looks like. It looks like, oh my gosh, that was a really good episode I just listened to with Avery and Karina. You know what? This chick seems okay. I might want to book some time with her. Let's have the rest of this coffee and talk to her together, or tea or whatever is your jive. I don't care. And so then we have a conversation. I get to understand what would make it the best year ever for you. Like, what's your dream? What are your ambitions? How do you envision your life if you're being
Yup.
like a little bit
Let
delusional?
them picture it right now so that
Yeah,
when they come and speak with you, they have their answers. So
I love
close your eyes, picture it right now. Finish the scenario, please.
That's a great. Thank you for the prompt. So close
Mhm.
your eyes for a moment, and I'll do the same. Really be delusional for a second and envision for yourself, like, what is your dream life? What do you envision that for yourself in old age? What do you see for yourself? You're on the rocking chair, like you're on the front porch. What's happening around you? Are you on land? Are you in a bougie luxury hotel? Who's with you? What does it smell like? What are you eating? All of those things. And I encourage you to take time for yourself after this, really, to meditate on that, listen to like some, hertz frequencies or whatever, journal about it, and have like a vision and an idea for that. Then we hold space together. We have that conversation and what that means for you. And we audit against where you are right now today, right? And set lofty goals for the year, because you got to start from somewhere. But we'll be able to like reverse engineer that because there's clarity on where we are going to end up. Clarity is power. So know where you're going.
Mhm.
And everything is a one-to-one relationship. So input determines output. Everything
Mhm.
into it determines output. So the first input step is having the conversation and having clarity on that piece of paper that you write about. So then I'll be able to understand where you are right now just through a deep fact finding analysis. I ask a lot of questions. I gather information. We talk about from your long term, the midterm, and the short term. We understand in different buckets. How much is in your emergency fund saved would be an example of a question I would ask. Do you have an IRA or any kind of retirement plan in place? That would be in like a midterm example. Longer term example would be like how much money is in your 401k at work, and maybe there's 10 years of work experience at three different jobs that you didn't like have it tracked down when getting those statements, and all of those things would become next step processes for us. We have clarity on that after our fact finding conversation, the one that we're getting initiated with. From there, we would have an understanding of what makes sense for you, but I would take the information that I have to myself to review and my team to be able to make a formal recommendation of the kind of coverage. From there, we would go ahead and put forth an application to be able to go through what's called initial underwriting. If for up to $2 million of coverage, it's possible to do what we call in the industry liquidless underwriting, where you don't have to do a medical exam. That's a new and something very new in a matter of weeks that's just been passed through. It used to be only $1 million. Now it's 2
Mhm.
million. Only $1 million. Isn't that like a fun phrase? I know it's like sounds like a lot, but yeah,
Mhm. It's not that much.
it's not that much when you're talking about like protecting the rest of your family for a long time. So, yeah, so that's the next step is like figuring out if we need to even get a medical for underwriting, but going through the initial underwriting process. And then, if we need medicals, ordering that someone would come, not just someone, a trained medical professional that's not part of our company, is part of a nursing partner, nursing. They are a nurse, I guess. I'm not the medical person, but they are an RN or registered, yeah.
Mhm.
Um, and our professional, they can come to your house or to your workplace, do some basic blood pressure. They do take blood if they have to do liquid. They might take a urine sample, all those things. Ask a couple questions. It takes 10 minutes. And even I, as squeamish as I am, can live through it, so you can too. And then we get the results back, and the underwriter, their job, not mine, is to cross check those results with what you may be eligible for, and the application process having gone through gets, approved essentially by the
Mhm.
or denied, and then we look for other options. Usually they get approved. And by the way, like starting young is the best thing because you get the lowest rates and you don't
Mhm.
have health risks. So it's easy to be able to continue moving forward. I'll say one other thing about that, but I'll just get through the process. Application is approved, and then what you do is you pay your first premium. So you don't pay me, you pay only the money that goes into your policy, and you can
Mhm.
determine how much or how little you want that to be able to get that coverage. Once you've applied and gone through that process, if you were to pass away the very next day and you would have been approved, and there
God
was a
forbid.
God forbid, it's terrible, but and I say that, but guess what? I've
It's
seen it happen.
possible.
I,
Mhm.
it's very sad. It's very difficult, but it happens. If it does happen, you can die knowing, looking down from wherever you believe in you are, that they paid out that death claim to your family, and that's huge. You could have very well put in $20 into your premium, and your family got $1 million just because you went through that measly paper signing process. And it's insane, actually, the fact that that's true. Um,
Mhm.
and hopefully that doesn't happen. Hopefully you live on to 110 years old. That's very possible too. But at least you know that that's the way that it is. So that's the complete process essentially. And then obviously that's just like one of the first steps in the different kinds of assets that can be built. Like we spent this time just talking about life insurance, but it's important that
Mhm.
we, because and I can get more into those things on the one-on-ones, but as the cash value accrues, that's when you can begin to essentially be your own bank and borrow against yourself to invest in other kinds of things. Maybe you want to get into real estate. Maybe you want to fund yourself to go to school. Maybe you want to fund your children's talents. Maybe you want to, you know, be able to plan for your retirement and use that money to pay for it or remodel your home. You don't have to
Yeah.
ask for permission. You literally can access that capital for your own self, and the death benefit stays intact. That's the other thing. It doesn't affect what happens after you die. It's just an added bonus, right? um
Yeah.
yeah, so there was one other thing I wanted to say about that. Now it's like escaping me. But it felt important anyway. Does that clarify the process for you?
It most certainly does, especially when you got to the point where it was okay, now we're set up, you have your insurance, you can borrow from it to continually build wealth because
Hmm.
that's just one of the vehicles. Having this investment as a vehicle where you can borrow from and then get more investments, like she said, you can, it depending on the amount that you get, of course,
Yeah.
build a business, you can get some rental property, you can get whatever it is that will continually build more wealth for you. So I love that. It's a lot. That was a lot of information, I know,
Yeah,
guys, but
a
trust me,
lot.
I think you broke it down really, really well that anybody who's listening could understand. And even if you don't understand, you still have the option and ability to connect with Karina so that she can sit down with you one on one and give you specifics because that was just general, for everybody. So it's not going to cost you anything to have a sit down with her so that
Right.
she can make it personal for you. Do not miss that opportunity because we have to understand to build wealth. We need wisdom so that we can win, right? So
Mhm.
don't miss the opportunity. So I'm going to let you close us out, wrap us up. Tell us whatever you may be feeling, whatever came into your spirit in regards to wealth, wisdom, and winning.
Mm. I guess I'll just sum with the concept and the belief, I suppose, or the knowing rather, that a lot of the time, sometimes we're even conditioned to think that money is evil or money is bad. I think that's something that can even be taught, like biblically speaking, which is wild because if you really understand what the message behind wealth is across all different faiths, across all different, um, true wisdom and understanding, the more that we can open ourselves, especially as women, to channel resources, we have the power to impact entire communities, countries, and the world in a very positive way by being a little selfish and taking care of ourselves first. And this is the very best way I can think of to do that. It's why I got into the business and it's why it's my pleasure to serve. Like, I get so much joy from these conversations because I can go to sleep knowing that the women around me, they're really protected and their families
Hmm.
are too. It's like the best feeling I can't even describe in words.
I love that. So thank you so much for your time, Karina. I really appreciate it, guys. I hope that you would reach out so that you can get some personal advice so that you can continue to build your wealth, continue to grow your wisdom, and you can ultimately win in life. Again, thank you so much for watching. If you believe that this has been beneficial to you, like, share, subscribe. If you need clarifying questions, go ahead and leave a comment. And if you think that this could help somebody, go ahead and share it with them, guys. Enjoy the rest of your day. Remember, God loves you, and so do we.
Yes,
Bye.